Hi friends, this is Ravi Kanth Miriyala. Today in this small session, let's analyze the paper that is Group 1 and Group 2 accounting, but my analysis will be restricted to accounting standards questions. This time, the weightage of accounting standards is from Group 1, it is 24 marks, and from Group 2, it is 28 marks. So totally 52 marks are from accounting standards alone, so which is going to be 26 percentage out of 200 marks, right? Before getting into this analysis, I have some small information to share. We Yashas Academy are with an academy. Yeah, we already announced a batch for group 2, yeah, which started already commenced on December 15th. This is 100% comprehensive and 100% English batch, right? And these are the teachers who are going to take the sessions. One is Meeta Mangal madam for strategic management, Rajavardhan is accountancy, and Mr. Mayur sir, that is he is also for accountancy, and Karthik Iyer is for audit, right? And economics is going to be taught by Shan sir, and financial management by Dhananjay Bhave sir, and Murgesh sir is for EIS, and myself for accounting standards. And as you know about an academy, yeah, you can attend the live session, you can talk to us in the class, you can raise a request, and you can hand raise option is available, you can raise and you can speak to us. We are there to help you. And if you are not able to attend the batch, then obviously recorded lectures will be available. It's not for number 2 views or 3 views or some, not like that. It's n number of times you can watch within the subscription period, right? And we'll be sharing some test papers with which you can assess yourself, your study progress, everything. That is all is going to be very much helpful to you, right? So why do you wait? Obviously, better subscribe at the earliest and attend the live sessions, right? That's going to be very much helpful to you, right? There is a plus subscription and iconic subscription. If you take iconic subscription, you will get the printed material, and you will get a mentor who will help you with doubt solving and etc. And test papers will be provided by them, which is going to be checked by a subject matter expert, and they will have a discussion after you write your paper. It's going to be very helpful. That obviously, because they are providing a premium service, they will charge you for that, right? This is what I am talking. A personal coaching, doubt solving, evaluated test paper, right, printed material, industry expert session also they are going to conduct, right? And as usual, the below information is available for plus subscription members. Live mentoring is never before. It's going to come. It's going to coming soon, and which will be very much helpful to you. This evaluated test series also. Once you are through with 40% of syllabus, there will be one test, and once you are through with 80% of syllabus, another test. And once you are through with full syllabus, full information, full subject information, then they will conduct one more test. So that means for each paper 3 tests are going to be conducted, and it will be evaluated by subject matter expert, and later they will come out and have a discussion with you, right? And they can give you a plan for improvement, and it is all going to be helpful a lot, right? And this is the basic information. Let's get into the matter. Yes, my dear, this is group 1 paper, right? I told you 24 marks have come from this. Let's read this. Many of the questions are from my material, which is these are all previous examination questions as well, and these questions are obviously there in my accounting standards made easy book, right? Anyhow, let's have a look at it. I'm not going to provide you the exactly answer to you, but the crux of it I'm going to discuss. That will be helpful to assess yourself. Okay, right? And here the first question, PP Limited is an Indian company, right? This first question is basically from accounting standard 11 oriented question. right? It's an Indian company acquired long-term finance. Okay, whenever you see long-term finance, then you should keep in mind, yes, as per the accounting standard 11, you have got two options. One you can charge that exchange difference will be always transferred to profit and loss, and you have got another choice, right? That irrevocable option, which if the company has taken, and if this long-term finance has been used for a specific fixed asset, depreciable fixed asset, then it will be adjusted with the fixed asset. Otherwise, it will be transferred to FCMITD, foreign currency monetary item translation difference account, which will be transferred to reserve, and from there it will be amortized to profit and loss over the period of the loan. Correct. So in this question, they have not told whether they have taken the option or not. That's why you should say either debit or credit to P&L or FCMITD. Both the information you are supposed to mention. Otherwise, they will be losing a small mark. Okay, right. And this the company took a loan, okay, amounting to this number. But look at this. They have given you in rupees, right? That you have to convert into dollar. The transaction was recorded at 72. Okay, then this divided by 72, then you will get to know how many dollars loan they have taken. Taking the exchange rate prevailing at that date. Okay, the exchange rate today, balance sheet date, is equal to 73.6. Got it? 73.6 is the balance sheet date rate. Obviously, long-term finance, it is a monetary item. What is it? It is a monetary item. Very simple. The exchange difference between 73 and 72, that's going to be 1.6. This is going to be a loss. Then you should say P&L, foreign exchange difference account debit, or FCMITD account debit to long-term finance loan account, whatever the loan account you are supposed to credit it, right? And look at the second one, trade receivables of PP Limited. Trade receivable means obviously short term. That's why there won't be a choice of FCMITD का situation कुछ नहीं मिलेगा. Then automatically you're supposed to charge it to P&L. Correct. It includes receivable amount. Again, this, see, interestingly, obviously they have to try their level best. That's given in rupees. So then you have to divide it with 73.4. Then you will get to know what were the sales on the date of transaction. And the exchange rate on 31st March. Yeah, today is equal to 73.6. Yeah, this the 1st April it is 74. See, daily it will change. That and all I cannot concentrate. Correct? Na? What is the rate on the date of transaction? What on the balance sheet date I am supposed to do? Trade receivable is also obviously a monetary item, and this difference, it's gone up because you have recorded at 73.4, and on the balance sheet date it is 73.6. Correct? 73.6. That's why, right? Yeah, that's why obviously it's going to be a gain to us. Got it? Right. Next, you are required to calculate the amount of exchange difference and explain the accounting standard treatment in the two cases which we discussed as per AS11. Following the extract, this is from accounting standard 3, cash flow statement. This is also very easy question, my dear, as I feel, but it's okay. How examination tension and all I have to consider. Right. Equity share capital, what is happening? It's increasing. It's increasing means obviously it's a financing activity. Yeah, issue of shares, but entirely it's not going to be cash transaction, because below he told it includes 60,000 of equity shares issued to Gray Limited for supply of machinery. So this is obviously a non-cash transaction. Yeah, this number 60,000 you are supposed to deduct it. That means 35 to 25 is equal to 10 lakh only. Financing activity you should have presented. Preference share capital, there is a redemption. Obviously there is a redemption of preference share capital. Security premium 50,000. Yeah, security premium increased 50,000 means 10 lakh plus 0.5, that is equal to 10.5 must be the, what is that? Financing activity, issue of equity share capital, cash inflow. P&L, right, it was 20, now it has become 28. That means 8 lakh rupees has been earned. Generally, if you don't give any specific information, I will say this is all full operating activity. It's an operating income. But below what he says, P&L account for the year includes 50,000 rupees dividend received. Dividend receipt is obviously investing. Correct? Na? It is an investing activity. That's it. That's also how the related items will appear in the cash flow statement. Hardly anything. Correct na? 8 lakh minus 50,000 means 7 lakh 50,000. I can say this is profit from, correct na? I mean operating activity. 50,000 rupees is from invest. 50,000 is from investing activity, and security premium, I mean preference share capital redemption and equity share capital issue is going to be financing activity. That's it. Very simple and 5 marks question. Yeah. Look at the C point. Mr. Mohan has invested some money in various mutual funds. Okay, mutual funds. Following information in this regard is given. Mutual funds data purchase and brokerage, stamp duty, and market value today. That is on 31st March 2021. They have given. What's the question? You are required to classify his investment in accordance with accounting standard 13. First, classification. As you know, classification can be current investment or long-term investment. Correct na? And value of investment. Obviously, if it is a current investment, either it will be at cost or FMV, whichever is lower. Correct na? And long-term investment is going to be at cost unless there is a permanent diminution in value. Right. But in the given question, he said we purchased long ago. So then obviously this is going to be long-term investment. Correct. And what about these two? See, these two, this is purchased in 2020, 21, 20. So these three things, there is a possibility of current investment and there is a possibility of long-term investment, which we don't know because, correct, na, it depends on the intentions as well. Right. That's why you should answer in both the angles. If it is concluded as current investment, will be measuring at cost or FMV, whichever is lower. What is cost? Total it, no, that's all. That is your cost. FMV he only gave. Compare it whichever is lower if it is current investment. If it is long-term investment, then say that I mean diminution is permanent or whatever it is. I mean you can take an assumption. You should mention the information like if it is assumed as long-term, what would be the value? If it is assumed as a current investment, what would be the value? That information if you had given, obviously you are eligible for 100% marks, right? And let's look at the what is that? Accounting standard 1 related question. This is also 5 marks straight away. ABC was previously making a provision for non-moving stock based on not issued for last 12 months. I mean old policy. Now the company wants to make a provision based on the technical evaluation. Same question has been asked some 1 or 2 years before. Okay, yeah, maybe it's a small number different. I don't think so, number also different. Total value of stock is equal to this, right? And this is the new basis provision. It will come to 4 lakh. This provision will come to 5 lakh. So there is if you change the provision, that's going to come 1 lakh rupees different. First of all, my dear, what do you mean by provision? Provision is an estimation, isn't it? Provision is an estimation. Yeah, provision is estimation where there is no precise mean, then we will go for estimation, obviously, right? So it is an estimation, accounting estimation. It is not an accounting policy. It is not an accounting policy. First of all, that is what you're supposed to do it, right? So now what is he saying? Discuss disclosure requirement of change in accounting policy. Here you say no, it is not a change in accounting policy, it is a change in accounting estimation. Yes, and because there is 1 lakh rupees difference, if you feel that it is going to be material to the company, then you can give a note. Yeah, company has changed the estimation, right? And this is the effect of 1 lakh rupees due to change in estimation, but it is not a change in accounting policy. That is one small information if you provide sufficient. Next, second point. In the books of K Limited, closing stock as on 31st March 2021 amounts to 1,24,000. Okay, which is based on FIFO. The company decides to change from FIFO to weighted average method for ascertaining the cost of inventory from 2020 to 21. Fine. Change from FIFO to weighted average, obviously change in accounting policy, right? In this there is no question. On the base of weighted average method, closing stock will come to this number, correct? Right. And FIFO method, it's coming to 1,24,000. So there is 9,000 rupees difference is there. That information, right? That information you should provide. Yeah, they have given you realizable value also, but your method is one cost is this number, NRV is this number. As you know, as per AS2, cost or NRV, whichever is lower only you are supposed to follow. Agree? Correct. So anyhow 115 only will come. what is that? 9,000 difference. Your profits are going to be reduced by closing stocks comes down, means automatically profits will come down. That's it. That is mandatory questions, right? Just give me little time. Let me go to towards the end. That is seventh question. They asked one more question, one more seventh one. Yeah, that is not so straight from accounting standard, but yes, it is related to accounting standard. Okay, right. This is related to framework, right? Framework for preparation of financial reporting. Then financial statements. What is meant by measurement? Measurement means how much. Correct. Now, determination. That is what. What are the basis for measurement? Yes, there are number of bases. One is historical cost method. One is net realizable value method, and fair market value method, replacement cost method. These 4 points, if you write it briefly, okay, that will bring you 4 marks. This is about group 1 paper, my dear. Okay, let's spend little bit time on group 2. Okay, right, that will take not much time, obviously. Yeah, this again all mandatory question, 4 marks, 5 marks, 4 papers, 4 questions. As per provisions of accounting standard 4, you're required to state with the reason, correct, whether they are adjusting or non-adjusting. This is the information. Yeah. First question, equity dividend for the year 2020-21 are declared on 15th March 2021. It is obviously non-adjusting, my dear. It is not a provision. It is not a liability as on 31st March. Done? Right. On 5/3/2021, 50,000 cash collected from a customer but was not deposited by the cashier. There was a fraud. Fraud was already existing during the year. Further information, correct, detection came subsequent. This is purely adjusting event. One building got damaged due to occurrence of fire. Okay, due to occurrence of fire on 23rd May. Okay, loss was estimated. It happened purely subsequent. There is no situation or condition existing on 31st March. This is obviously non-adjusting event. Okay, just give me a few seconds. Yep. Yeah, that's it. That is about 3 situations. If you write 5 marks, you are going to get it. Given the following information of Rainbow Limited, okay, what does he want? In each of the above cases, give it, what is the amount to be recognized as revenue under accounting standard 9? Right, when can you recognize, my dear? If it is a goods, right, when risks and rewards related to ownership has been transferred, and 2, right, and it can be, what is that? When there is no, no doubt on ultimate collection. Right. So that's what the point. On 15 November, goods worth 5 lakh were sold on approval basis. Correct. The period of approval was 4 months after this. Which day? 15th. 15th November means 15th December, January, February, March. So 15th March, your 4 months time is up. Buyer sent 75% of the goods sold up to 31st January. That means 75% of money. 5 lakh into 75% you must have recognized in the month of Jan. No approval or disapproval received till 31st March. Getting my point? But once the time is up, it is automatically deemed that the other party has accepted. So remaining 25% you should book it in the month of March, because 15th March is the last date. Okay. On 31st March, goods worth of 2,40,000 were sold to Bright Limited. Okay. But due to refurnishing of their showroom being underway, on their request, goods were delivered on 10th April. Correct. So here, this is what I taught in the classroom also. What is that? Bill and hold. Correct. Now, billing, invoicing and holding. Reason first you should mention, that is at the request of the customer. Goods must be packed and ready to dispatch, and goods must be identified. And these goods the seller should not be in a position to redirect to anybody. Correct. Goods, even though it is with me, I cannot sell it to another customer. I'm just I'm just holding on behalf of the customer. Under these circumstances, you can book the sales in the current year. On 31st March itself, you book 2,40,000 rupees revenue. Okay, right. Rainbow supplied goods worth of 6 lakh to Shyam and concurrently agree to repurchase the same on 14th April. Right. It is repurchase, sale and repurchase. Sale and repurchase is like a finance arrangement. Yes, it's like we gave loan to another party. It is not sale of goods. So this will not be recognized as sales. Next, Due Limited used certain assets of Rainbow. Rainbow Limited received 7.5 lakh and 12 lakh as interest and royalty respectively from Due Limited during the year 2020-21. Yes, interest should be recognized on accrual basis. Royalty should be recognized based on the agreement. That is also on accrual basis only. Yes, if it is accrued during the year 2020-21, yes, please book the revenue. Right. 25th December, we send some goods on a consignment, but out of that 40% of the goods are unsold. That means 60% of the goods were sold before 31st March. So to the extent of 60%, book the sales, recognize the revenue. Okay, that is with respect to question number 2, 5 marks, which is very straight, but okay, depends anyhow. Right. Surgical Limited is developing a new production process of surgical equipment. Production process you are developing, that is development. Developing means accounting standard 26 must have come to your mind. During the financial year 31st March 2020, the total expenditure incurred on the process was 67 lakh last year. The production process met the criteria as an intangible asset on 1st January 2020. Expenditure incurred till that date is equal to 35 lakh. Got my point? Right. Till 1st January 2020, we spent 35 lakh rupees, but it was not satisfying the 6 criteria concept. Correct now? If you remember accounting standard 26, a development expenditure can be capitalized only when it satisfies 6 criteria. Otherwise, it should be charged to profit and loss. Right? So, till out of 67 May, 35 should be charged to obviously P&L. Then 67 minus 35, whatever comes, that can be capitalized. Further expenditure incurred on the process for the financial year next year was 105. Okay, that means totally how much? 67 minus 35, right? 60 minus 37 is equal to 32. Correct na? This is 32 plus 105. Yeah, 32 plus 105, 137. Okay, as a recoverable amount of this is equal to 89 lakh. They only give recoverable amount. I spent, correct now. Simply if I write as an intangible asset 137, if I sell or use it whatever the way, if I am able to get only 89 lakh rupees, how can I show 137 rupees in the balance sheet? Should not. So obviously there is one more concept of accounting standard 28. It's not there, but this question is obviously part and parcel. That 137 minus 137 or 89, whichever is lower only should go to balance sheet. That means the difference between these two should be charged to P&L. That you can calculate. And if you say that should be charged to P&L in the year 2021, correct? Now expenditure to be charged to P&L, that number means 137 minus 89 should have gone to P&L. Got it? Right. Expenditure charged to P&L in 2020, which we discussed. Up to that 35 lakh was incurred. Carrying amount at the end. Carrying amount at the end means 32 would have been the carrying amount. Carrying amount of the intangible asset on this day. This day is equal to 89 because whichever is lower only will come there. Right? Moon Limited is absorbed by Sun Limited. The consideration being taken over of the liability. Okay. The payment of cost of absorption not exceeding 10,000 rupees. Okay, actual cost is equal to 9,000 only, no problem. Payment of 9% debentures, premium and debentures, okay. Issued at a premium of 25% on the face value. Payment of 18 per share in cash. Allotment of 11% preference shares, right? And premium, everything is given. The number of shares of vendor, this is also given. Calculate the purchase consideration. I don't think so there is something difficult. Straight away information is available. Purchase consideration, whatever the amount paid to shareholders, that is purchase consideration. Correct? Now, the absorption cost obviously will not be part and parcel. The payment to debenture holders is also not part and parcel of purchase consideration. That is accounting standard 14. From accounting standard 14, you can take the definition and you can apply the same thing. I told you absorption cost will not be there. Debenture, whatever paid to debenture holders is also not part and parcel. Okay. And from the 7th question also, not 7th question, 6th question. Yep. Yeah, this is from accounting standard 19. Yes, generally standard 19 say question will come. Yeah, somewhat good question. No, I mean, thought tricky, not very much actually. Right. A machine was given on 3 years operating lease. Okay. Operating lease, first point to catch. By a dealer of the machine for equal annual lease rentals. This is one thing. Yield is equal to 30%. Okay. Yield is 30% means this is only IRR. That's it. Right away. Okay. Profit margin at the cost of 2,25,000. Done. Economic life of the machine is 5 years and output economic machine is equal to 5 years, life is equal to 5 years, and we are going to enjoy the benefit in this fashion consecutively, I mean continuously for 5 years. Straight line depreciation in proportion to output, this is first word you need to catch to be appropriate. Annual lease rentals, very simple my dear. First you need to do what now? Present value annuity factor at the rate of 30% you calculate. Present value annuity factor at the rate of 30%. Okay, right. Whatever that comes, right, that you divided cost divided by your present value annuity factor. If you apply it, then what comes is equal to MLP, that is minimum lease payment. That is what annual lease rentals. Okay, right. That is the first and foremost thing which you need to do. Next, lease rent income to be recognized in each year. Right. Lease rent income in case of operating lease, generally what do? Straight lining will do. Right. The standard says either straight line or any rational basis. That also you can follow actually. Any rational basis also you can follow. Right. Here rational is, right, what I say, 60 is to 75 is to 90. E ratio may you should put it, because I know by using the machine, this is what the benefit a lessee is going to get. Correct na? Lessee is going to get. So then obviously, sorry, yeah, lessor is going to lose. That is what lessee is going to get. Lease rental income, correct, I agree to it. Yeah, I told you, generally straight line method or any other rational method. Yes, you can take 60, 75, 90, because 3 years that guy is going to consume it. That's why my consumption is in my asset is getting consumed in this ratio. That's why I can say I put the rental income in this ratio. Okay, same ratio. Depreciation is for same ratio. Depreciation, again, depreciation also the same ratio, because depreciation method should reflect the consumption of economic benefits. That is as per accounting standard 10. Right. With respect to depreciation, one has to refer. So depreciation also 60 is to 75 is to 90 is to 120 is to 105, obviously. Right. And income also you do it not straight line, means not divided by 3, put it in the same ratio. Okay, that makes more clear and fair actually. Right. And this is one more question with respect to accounting standard 20. At the time of calculating diluted earnings per share, effect is given to all diluted potential equity shares that are outstanding during the period. Correct. Comment and also calculate basic and diluted earnings per share for the year 2021. Net profit for the year. Okay. Number of equity shares outstanding. Perfect. Yeah. So basic means this divided by this, basic rate will come. Correct na? Right. Number of 9% convertible debentures of 100 issued on 1st July 2020. Remember? 1st July 2020. That means it was outstanding only for 9 months out of 12 months. Yeah. When you are calculating, you must take this into consideration. Each debenture is convertible into 8 shares. No problem. So how many debentures are there, my dear? Right. Value is equal to 100 each, means 750. So 750 into 8 is the number of debentures you are going to convert. Correct na? Into multiply divided by 9 divided by 12. E number whatever comes, that will be one part of denominator. Denominator in the sense number of equity shares already 15 lakh plus E number. Okay, sorry, this is not 75,000. 75,000 is not rupees. Sorry, I thought rupees first. Okay, 75,000 into 8 into 9 divided by 12, you should take it. That part will come here. At the same time, it is 9%. Na? Correct. 9%, as you know, interest will be added back and the tax effect is supposed to be reduced. 35% tax rate also given by them. That's it. correct na? Your numerator में is 64,12,500 will come plus interest expenditure. Interest is what? 75,000 into 100 into 9%, whatever comes that number, minus interest into 30%, 35% will be the deduction, divided by E 15 lakh plus 75,000 into 8 into 9 divided by 12. That number you put it. Then if it is lower than the basic, then you say that is diluted EPS. That is what about matter, my dear. E point anyhow is with respect to, right, equity stock option, that you have a separate stand. There is no standard, there is an accounting, I mean guidance is given by ICAI that you must have followed. Hope all of you must have written, right, and hope this video is useful to you, and please like and subscribe to the channel, right, and thank you, wish you the very best.